Peloton, Chipotle, Pfizer, Disney, and Twitter all gave their quarterly earnings this week. Let's go over what these companies talked about and the outlook that they provided for the year ahead. I'm Mark Palmer, ex-financial professional. You may have found me through my Twitter or Instagram at MarkPWealth. If not, great to have you here. If you haven't already, please subscribe to my channel, like this video, really helps me out a lot. Thank you. Let's dive right in, but real quick, just making sure that you understand that this is not financial advice. It's purely financial education. If you do want financial advice specific to you, seek out a financial advisor. All right, let's kick things off with Peloton, one of the most interesting stocks of the past couple of years. And they just announced that their CEO, John Foley, will be stepping down as part of a broader restructuring of the business. This news came as the company reported a loss for the quarter of $439.4 million, as opposed to a year prior, they had a profit for the quarter of $63.6 million. Additionally, the company is laying off 2,800 employees, but they're giving each of these employees, as part of their severance package, a one-year subscription to Peloton. Speculation continues about the company being acquired, but there are yet to be any credible reports on this. Still, there are rumors of big companies that are in talks with Peloton to acquire the company. We're looking at names like Nike, Adidas, we're looking at Amazon, we're looking at potentially even Apple, and Lululemon is a name that has recently been thrown in the mix as well. Moving on, let's talk about one of my favorite restaurant chains, Chipotle, beating analyst estimates on earnings per share and posting a net income for the quarter of $133.48 million. This number is actually down from their year prior figure of $190.96 million, and this is in part due to supply chain issues, particularly rising costs of beef, avocados, and their freight. To offset these rising costs, Chipotle has risen their costs as well. And compared to a year ago, you'll pay on average about 10% more for your meal at Chipotle than you did a year prior. The company is set to open 235 to 250 new Chipotle locations this year in 2022, with 80% or more of these locations containing Chipotlanes, which is the drive-through pickup service for online orders of Chipotle. In 2021, digital sales accounted for 45.6% of all sales for Chipotle restaurants. Next up, let's talk about Pfizer, who posted mixed earnings for quarter four of 2021, beating analyst expectations on earnings per share, but missing their expectations on revenue. The company is forecasting between $98 billion to $102 billion in revenue for 2022, and a lot of that is thanks to their COVID mRNA vaccine, as well as their new COVID treatment pill called Paxlovid. No idea if I'm pronouncing that right, but it's new. I'm sure we'll all learn what it is and how it's pronounced eventually. The company said that it is selling 20 million courses of this pill to the United States, and they're selling it for approximately $530 per course. And this is actually a discount for buying in bulk. They say that the normal cost for this drug is actually $700 per course. CEO Albert Bourla said that the company will continue to expand its use of the messenger RNA vaccines, like what is used in the COVID vaccine, and they will expand it to treat diseases, rarer diseases that are found in the liver, muscle, and central nervous system. All right, time to move on. Let's talk about Disney. They had a good earnings report, beating analyst estimates on earnings per share, revenue, and Disney Plus subscriptions. They added nearly 12 million subscribers in the most recent quarter. Another interesting tidbit for Disney Plus is that they are in the bidding war for NFL Sunday Ticket, which would likely bring consumers rushing to join the platform if they're not already a subscriber. Another notable figure for the company is their parks revenue doubled year over year to $7.2 billion, showing a strong comeback of guests to their parks, hotels, and cruise ships. Last up, let's talk Twitter. They missed analyst expectations on earnings per share, revenue, and monetizable daily active users. The company did announce a $4 billion share buyback program. This was the first earnings call without ex-CEO Jack Dorsey. If you've been a Twitter investor since their IPO, the stock price has fluctuated quite a bit since then, but right now, it's currently around that similar price to what it did IPO at. Kind of makes for a little bit of a frustrating ride for a company that a lot of people believe to have so much potential and just hasn't quite shown it yet. All right, that was a quicker talk today. We got through each of those 5 companies. I'd love to hear your thoughts in the comments below, or if you have any questions or feedback, please provide that to me in the comments below, or you can reach out to me on Twitter or Instagram at MarkPWealth. Appreciate if you would subscribe to this channel and like this video if you did enjoy this content. Thanks again for watching, and we will see you next time.